From volume-driven zones and volatility-filtered price levels to ICT-style institutional tracking, these three TradingView toolkits can seriously change the way you trade. Let's dive in. Created by FXDMN, this Pine script indicator implements Inner Circle Trader (ICT) concepts through session-based range tracking and killzone visualization. It monitors three primary ranges: CBDR, Flout, and Asian range, all based on New York time zone with automatic time zone adjustment. The indicator tracks price extremes during each session, calculating ranges in pips and displaying them through colored boxes with configurable borders and transparency. It automatically detects session starts and maintains high-low values throughout active periods, giving traders precise measurements of institutional activity windows. Standard deviation projections extend from each range, providing potential reversal or continuation targets based on historical volatility. Killzone highlighting marks London Open, New York Open, London Close, and Asian Open sessions using either horizontal lines or filled boxes. These zones indicate when institutional order flow typically enters the market. The indicator also plots daily opens, midnight levels, and previous period highs-lows, day, week, month, as reference points for price structure analysis. The stats box displays real-time range comparisons, ADR, average daily range, CDR, current daily range, CBDR, and AR, Asian range. Text colors dynamically adjust based on range size, green for ranges under 40 pips, red for larger ranges. Customization includes independent toggle controls for each component, adjustable colors and line styles, historical display options, and projection line quantities. It translates ICT methodology into measurable session ranges with statistical projections, making abstract concepts actionable. The multi-session tracking and comparative statistics provide context for institutional behavior patterns. However, effectiveness depends on understanding ICT principles and recognizing that session-based ranges work best in liquid markets with clear time zone-driven flows. Created by Big Beluga, this indicator implements trading concepts associated with Donald's methodology through three analytical components: dynamic support resistance levels, order blocks, and automated trend lines. It processes only the most recent 400 bars to maintain performance while focusing on actionable price structure. The levels component identifies pivot highs and lows using a configurable lookback period, default 20 bars, but adds volatility filtering to eliminate insignificant swings, plotting only pivots where normalized volatility exceeds 20. This filters out consolidation-based pivots that lack momentum significance. Each level dynamically changes color based on price position, green when price trades above, red when below, providing immediate visual feedback on support-resistance status. The indicator extends these levels rightward until price breaks through by more than 2.5 times the 200-period average volatility, automatically removing invalidated levels. Order blocks detect price gaps preceded by directional momentum. A bullish order block forms when price gaps up, leaving space between the two bar-ago high and current low, after a series of bearish candles, marking the last down-close candle before the gap as institutional accumulation. Bearish order blocks require gaps down after bullish sequences. The indicator requires gaps larger than half the 200-period ATR to filter noise, drawing boxes from the originating candle that persist until price trades through them. It automatically removes overlapping or undersized blocks, maintaining only the most significant zones up to a maximum of 20 per direction. Automated trend lines connect pivot highs and lows based on configurable periods, extending them forward by a user-defined multiplier, default 10. These lines project potential support or resistance trajectories based on established swing structure. The indicator maintains only recent trend lines to prevent chart clutter while showing active directional bias. Each component operates independently with separate toggle controls. The level system updates colors in real time as price relationship changes, while order blocks and trend lines remain static until price invalidation. It combines volatility-filtered levels with institutional footprint detection and automated trend projection. The volatility normalization prevents clutter, while order block logic focuses on momentum-driven imbalances. though the 400 bar limitation restricts historical context and gap interpretation, requires market understanding. Before we get to our highest rated indicator, quick shout out to channel members who recently joined. You're getting early access to videos like this, and your support means a lot. Created by LuxAlgo, this indicator analyzes volume patterns to identify areas where institutional activity and significant trading interest concentrate. It tracks 4 distinct concepts: ranges of interest, impulses, levels of interest, and volume divergences, each revealing different aspects of volume-price relationships. Ranges of interest identify periods with the highest volume within a look-back window, default 50 bars, marking the high and low boundaries of these zones, plus an average midpoint. These ranges highlight where the most aggressive buying or selling occurred, often indicating accumulation or distribution phases. The indicator updates these zones dynamically as new volume peaks appear, showing traders where market participants demonstrated strongest conviction. Impulses detect simultaneous volume expansion and directional price movement. A bullish impulse requires both volume and price highs to exceed their previous look-back period highs, default 20 bars, while bearish impulses need volume highs paired with price lows, breaking below previous lows. These candles receive colored borders, green for bullish, red for bearish, marking explosive moves backed by participation rather than low liquidity spikes. Levels of interest plot horizontal lines at price levels where volume pivot highs occurred, maintaining up to 5 recent levels, configurable. These lines use gradient coloring based on their relative price position, with colors transitioning from blue low to red high. They represent price areas where previous volume spikes suggest potential support or resistance as market memory. Volume divergences compare volume pivot highs against price pivot highs and lows. When volume makes a lower high while price makes a higher high, the indicator draws a bullish divergence line, suggesting weakening upward momentum. Conversely, when volume decreases while price makes lower lows, it draws bearish divergence lines, indicating potential exhaustion of selling pressure. These patterns reveal when price movements lack volume confirmation. The toolkit offers independent toggles for each component with customizable lengths and colors. Users can adjust how many levels of interest display, modify look-back periods for different time frames, and control visual elements separately. The ranges update only when new volume peaks occur, preventing clutter while maintaining relevant context. It transforms volume into spatial reference zones and momentum signals, making institutional footprints visible through multiple analytical lenses. The modular design prevents information overload, though effectiveness requires understanding which component suits current market conditions. Our TPRSI script is more than just an oscillator, it does it all. Check out our latest video to learn exactly how to make it work for you.